From inclusive finance to sustainable economies, Africa is building its future. This is The Sound of Progress, a podcast by FSD Africa. This is Financing Africa's Future.
Hello, everyone, and warm welcome to Financing Africa's Future podcast by FSD Africa, where we get to discuss everything about deepening financial markets in Africa, adaptation finance, mobilizing private domestic capital, and enhancing climate flows within the continent. And today we are very pleased to be joined by Bianca Gichangi, who is the regional lead at Voluntary Carbon Markets Integrity Initiative. Quite a pleasure to have you, Bianca.
Thank you, Kaara. It's a pleasure to be here with you today.
VCMI is quite a long name. Maybe you could tell us a little bit about it and what you guys do.
Sure. So the Voluntary Carbon Markets Integrity Initiative, VCMI, we're a non-profit organization that provides guidance to corporates on how to use carbon credits, high integrity carbon credits credibly and towards real climate action.
Yes.
And we also support host countries in terms of setting up the frameworks for them to participate effectively and maximize on the benefits from carbon markets towards their climate goals.
I know you've just come from Africa Climate Summit 2 in Addis, and it was really great to see you and to connect with you there. What are your takeaways and key highlights from that summit?
It was really good to see the advancement from the first ACS, and this particular one in Addis, ACS 2, was a turning point for carbon markets. It was shifting the conversation from should carbon markets exist to how can we actually implement and scale it in Africa. And it was really great to see countries doing this on their own terms, really unpacking what it means for their priorities and towards their climate and development goals. It had very rich discussions around what it takes to produce high quality credits on the supply side, the enablers in terms of financial institutional support, advancements in digital monitoring, reporting and verification, and also the demand that is now emerging as well. But also to see that there's going to be a lot of learning by doing.
Yes.
A lot of this, it's a new generation of markets. So Article 6 is new for countries all over the globe. So It's going to be a lot of learning along the way. But it was also really welcome to see the AU's equity and integrity principles being launched for consultation through the work of the AU Development Agency. And that will really put social value at the core of participation for African countries as well. And it was also good to see the regional alliances, the West and East Africa alliances on carbon markets and climate finance, really demonstrating the capacity they have been enhancing the governments to have, but also the regional collaboration and advancements that countries in both regions are having in terms of carbon markets. So we're a diverse continent, but it's really good to see that we're having a shared vision on carbon markets emerging and also advancing.
Yeah, I mean, I couldn't agree more. It was quite something to see Africa really coming together and speaking in one voice and pushing the climate change agenda and all that's required on its own terms. I think that was quite something. I know we are here, of course, to discuss the carbon markets, but before we get there, let's talk on a broader sense about climate finance and how it's flowing or not flowing in Africa in comparison to other regions of the world.
In terms of the African continent receiving climate finance, it's around 43.7 billion. And yes, it's increased over the past 2 years, but it's significantly less than what we actually need, around 190 billion per year. We know that also the new collective quantified goal, NCQG, under the Paris Agreement of mobilizing 300 billion falls far short of what we need for the 1.3 trillion developing countries need per year by 2035. So the gap is immense. And for developing countries, we really need to look at all the available tools that we have. And that's where carbon finance comes in. And it's just one of the many. It's not a solution in itself. It's part of the solution. And using it accelerates that aspect of it. So carbon finance can actually leverage even larger sources of capital, and it can catalyze the uptake of low carbon technologies through making them more cost effective and available to developing countries. So, and then of course, the revenues channeled to where they're needed most in terms of community benefits, those who are protecting our ecosystems, and also to our priority sectors for green growth.
All right. Yeah. I mean, Bianca, let's talk a bit more about the global carbon markets. What is your sense of them? Of course, broadly, I know, climate finance is in far much shortfall and gaps, as you say, but specifically carbon markets, are they delivering? Do they make you happy? What's your assessment? What's your sense of them?
My sense is that they are not reaching their potential. So, and also when we talk about global carbon markets, we're looking at compliance markets where we have emission trading schemes, and those have been around a bit longer, they're larger, they've been raising revenues. So if you look at the revenues from ETSs, last year it was about 67 billion. And then you have project crediting based mechanisms that generate credits that are used voluntarily by corporates and can also be used for domestic goals. And that's where we know the voluntary carbon market from, which is a lot smaller. And when we look at its peak, it was about $2 billion between 2021 and 2022. And that has gone down to around 700 million due to various reasons. Integrity concerns, market uncertainty, and we're also seeing a shift in buyer preferences. But it's really important to factor in that a lot has been done in terms of addressing the integrity concerns, especially around issues on overcrediting and making sure that sustainable development benefits are being translated. So in this regard, ICVCM, which is another long acronym, the Integrity Council for Voluntary Carbon Markets, work on the supply side in providing guidance on how to generate high quality credits that are real, that are robust, transparent, accurate, but also factor in the benefits, that safeguards are in place and really just contributing to our efforts for decarbonization and net zero. Mm-hmm. And then on the demand side, we have VCMI, where we have guidance to corporates on how to use these credits credibly for their climate action, real action as well. So you're seeing that in terms of this, it's addressing the integrity issue and it's already providing improvements to the different markets. Yes.
Thanks, Bianca. I've always wondered, voluntary compliance markets, should we all go compliant? Should governments push for that? Do we keep on both? What's your assessment again?
So I actually feel it's not an either or. There are benefits across both. When you're looking at compliance markets, those are jurisdictions that have regulation, and you'll often find within those jurisdictions, they have, demand and supply and sustains their own kind of market. But when you're outside of that, like in Africa, we don't really have those kind of systems. So we end up being producers of credits that are used either voluntarily or can be used in these systems if they allow us. So for us, and then also there's Article 6 now of the Paris Agreement, where countries can use these credits for their NDC achievements. So you're seeing a system where there's a lot of convergence, where voluntary or rather independent carbon market standards are now aligning a lot more to Article 6. So you're seeing a lot of convergence in the system, a lot of complementarity, and it doesn't make sense to separate. You need to look at the benefits across the board and have a holistic framework. So for African countries, you need to be able to develop frameworks that look to both. Otherwise, you stand the risk of not getting the benefits from the VCM as well. And then you also have to look at the demand, how it's coming out. So if you're having Article 6, most countries have signed up to the Paris Agreement. You can decide to use it or not. So there are some countries that are showing, demand for this. And if you as a country, you can work towards that. You have to put in the arrangements. But there's also VCM activities that are innovative within the countries. They can contribute to your NDC as well, your conditional targets. So there is benefits, even though it's smaller. You can definitely tap into that as well. And then there's also CORSIA, which is demand that's coming up from the aviation offsetting system as well. And in fact, the demand there is quite a bit at the moment. So if you look at CORSIA demand by 2030, it will be about 466 million tons. Article 6 will be about 219. So it's a lot smaller, the Article 6 one, but it's country demand that is very clear. And then you also have the airlines, and then you have the corporates who are still have their net zero targets and climate goals and still want to use credits. However, because of the concerns we had said before and not having clarity, what's important across regulatory or voluntary is having clear, stable and aligned rules on how to use these credits. So that's why initiatives like the Coalition to Grow Carbon Markets, which is government driven, is sending a strong signal to businesses on how to use these credits. It's a coalition that's driven by Kenya, Singapore and the UK, but also France and Panama founding members. And they aim to have shared principles on how to use these credits by COP30. So you're seeing a lot more standardization, and it's giving a good signal in terms of how to use these credits, and then boosting the confidence, and then therefore increasing scale as well.
Well, thanks, Bianca. So African carbon markets, if we were to sum it up in a nutshell, in terms of depth, sophistication, and distribution, where are we?
Well, we have been in this space. We've been playing in it for over 20 years now. But it's what I was saying. Most of our credits in terms of issuance was from the voluntary carbon market space. Our experience with the clean development mechanism was not that great. 3% in terms of benefit globally is very small. But there is, like I've been saying, there is still projects that are issuing credits. We're seeing last year, there was issuance of around 63 to 65 million credits, and they're being retired, so they're being used, about 43 million as well. This is mainly in energy efficiency and RED+, which don't really fetch a high price at the moment. But it also shows the potential to tap into other sectors as well. So we are at a juncture where we can increase those projects, but we're also looking to new projects in Article 6. And Article 6 also has a crediting mechanism, the Paris-aligned crediting mechanism, and there needs to be a lot of regulatory and policy frameworks in place for you to participate in 6.2, which is cooperative approaches between countries, or in this mechanism as well. So we definitely also are not reaching our potential, but that can also be an opportunity.
Well, thanks. Thanks for that. A very common question I keep hearing in the many global conversations I take part in as far as carbon markets, it's of course the fact that African credit markets tend to fetch much lower than in many other parts of the developed world. What are your views about this? How do we correct this scenario?
It's true. You can find that with certain credits, the credits in Africa, the exact same credit in another jurisdiction has a better price and it's lower for us. There's many issues for reasons around that. It could be real and perceived risks as well, concerns over changing regulations, the robustness of the credits. But how we can change that is actually improving our data to back up the true value of the benefits coming up out of Africa. Because it's not just about the emission reduction or removal anymore. You have to demonstrate the sustainable benefits, the improvements to livelihoods, and be able to actively show and back it up with evidence the benefits that these credits are generating. So an interesting perspective you can also have with this is that it's now becoming a discussion of low quality versus high quality. So in that example that I gave you, where the prices for the African credits is lower, some would say it's around those credits that sometimes are often viewed as lower quality. Whereas we're seeing with those that are viewed high quality, like African credits, for example, in afforestation,
fetching better prices.
Higher. They're actually fetching higher than North America and Asia, up to $37. So for the voluntary market, that's very good. So you can see it's really about, for African projects, how can we demonstrate that we are factoring in those quality aspects of it. And we're also saying that we've seen from rating agencies that those that are demonstrating more quality are commanding a premium on top of the market price. So there are differences coming up in terms of quality that are affecting the price as well. So the onus is on us is to be able to enhance our narrative with more evidence and data to back it up, and just to really demonstrate that it goes beyond the reduction and the removal.
I couldn't agree more. I think that's really important. Of course, we don't want people playing games in this space. Of course, you want that, as you say, the credits, if they are generated, then they are high quality, they are verifiable. and they are playing up as their role in cutting down on their emissions. Let me ask you, beyond carbon credits, are African companies, organizations, using carbons credits as part of their decarbonization strategies?
Actually boils down to that if they do have net zero targets or climate goals or plans climate plans along the way. And what we've seen with a lot of African countries is now when we come to corporate reporting, a lot of them do scope 1 and scope 2 emissions reporting. Scope 3 is a bit challenging. Of course, those are emissions outside of their indirect emissions that now are a lot harder to get data for, and it's very hard to set targets for those. So we don't see a lot of scope 3 in Africa. And also you'll find that some companies that are doing this kind of reporting, even though they're large, they're headquartered outside of the continent. So maybe in Europe or somewhere where they do the global reporting from that end. So you didn't say that that company particularly is doing it. However, you need to look at jurisdictions as well. So in South Africa, they have a carbon tax where you can use carbon credits for some of the taxable emissions. And in that regard, the companies in the country are using carbon credits for that. And then you can also look at Egypt, who have now, they've set up their own voluntary carbon market system in the country, but it's actually regulated by their financial regulatory authority. And in that regard, you're seeing a few companies now starting to buy credits domestically. But we still have a long way to go in that regard. But the more we start looking towards spurring domestic activities, then we'll see more of an uptake of that.
I mean, I agree to that. Long way to go, and really seems there is a task for everybody, for governments in setting policies and regulation, for the private sector players to see what role they can play, for development actors like ourselves at FSD Africa to see how we can support. And I'm very proud to say that we have now a fully functional carbon market center of expertise that's really working with a lot of people in the financial sector to help drive progress in that. As we come to the close, and I think you mentioned a little bit about that, about standards, categorization, taxonomies. Are we all agreed as far as carbon credits are concerned, what they are, what projects fit in which bucket? Are we getting good harmony in there?
Yes, you'll find that there are different standards out there, but what matters is that the underlying integrity cuts across all the different standards that are available. So you'll find like ICVCM have an assessment framework, which now different standards can apply to, and just make sure they have integrity. Because for you as a developer, you might prefer one standard over the other based on what they're offering. But in terms of quality and making sure that your credits are real and robust and meeting all the thresholds, it's important to have a standard across the board in terms of integrity, and at least that's there. When it comes to ETSs and just what I mentioned in terms of using the credits, clear, aligned, stable rules across the board is needed, even just in terms of investment. For financiers or investors to put money into these types of activities, there needs to be clarity and standardization and harmonization across the board. So yes, there are different initiatives across the board, but what's important is that they're working together to make sure that they're complementing, and the underlying issues to make the market robust and transparent are being upheld. So that at least is emerging, and we can see that even with these foundational principles, say around integrity, once you embed them in policy, then it becomes a standardized way of operating even across jurisdictions. So, and even for the ETSs, it now, if you want to link with other ETSs, it helps if you're operating in the same manner. So standardization and harmonization is really key to boosting the confidence in this market. And we're seeing a lot of that. If something new comes up, it's how does it align with what's already existing so that we can actually establish a best practice out of that.
Thank you very much for that discussion, Bianca. Any closing thoughts, parting shots?
I'd say that we are doing a lot as African countries this time around to ensure we have the frameworks to participate. So that's institutionally, policy, regulatory wise, we are actually doing the work to be able to provide an environment to participate. But now the onus is on, let's implement and let's scale and let's have a discussion where we're seeing this translate into a bigger market share for the continent, just in alignment with the declarations that have come out of the ACS. Let's not get too trapped. Like, we've been in readiness for a very long time, and it's good, and we're building the capacity. But can we actually translate that into implementation, into more high quality credits coming out, into more revenues for the continent, into more benefits for our communities?
A bigger share for the global carbon markets. I like that.
Yeah.
Thank you very much, Bianca, for your time.